Okay, good afternoon, everyone, and welcome. Thank you so much for sticking around. I know it's late in the day a little bit. It's 2 p.m. And thank you for allocating this time to spend with me to talk about the markets. Now, this is a little bit of continuation of what we have discussed in yesterday's session. Yesterday was more into Fibonacci's. Today, I will show you how these methods are able, the methods that we're using, whether it is the hybrid Elliott waves that I'm using, whether it is the Fibonacci, these are the real price action. These are, guys, indicators from real price action. They're not delayed indicators, right? So any other indicator that you may see on a chart, and I'm also using moving averages. Well, moving averages are delayed. They're a delayed indicator. The only true non-delayed indicator is price action itself. And that's why this presentation today about Elliott waves, about Fibonacci is so important. I use a blend of those. And like I said, I use a hybrid of Fibonacci. I was taught this methodology when I started trading and when things, started to come together into my trading. But today I will be talking about how you too can generate a 6 to 7 figure income, trading only 2 hours a day, paying attention to price action alone, using whether Fibonacci or whether you're using the hybrid Elliott waves like I'm using, trading the New York trading session. And it's not hard, it's not rocket science, and you're going to see this ladder progression all the time. The beauty about using Elliott waves is that you're not going to have a lot of mistakes in determining your directional bias, and that's going to keep you on the right side of the tape. And that's one of the most important moves and the most important things. All right, so let's get started. My name is Anka Metcalf, and I'm the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, actively invest in the stock market and the futures market. I've always been a trader, a stock trader, an ETF trader, but for the last 10 years, guided by my accountant because of tax purposes, I have navigated towards day trading futures, and it's the best thing that I've ever done because I have customized a methodology that allows me to only trade 2 hours or less in the morning and basically make my money in the morning and be done for the rest of the day. Also, I come with 10 plus years in investment banking. I have been trading on my own for more than 20 years. I run a swing trading service for stocks and ETFs since 2010 with transparent performance that is on our website. Also run a trading room every single day since 2017. This is the latest addition to our portfolio of services. And we do offer trading education for swing trading, day trading, investing. I am a high velocity expert. I'm an expert in high velocity trades. What that means is that when I look at the possibility for an entry, the price works more than 80% of the time. So the price action works in my favor more than 80% of the time. And that's the goal, right? That's everybody's goal. I'm also the designer of an institutional proprietary trading system that is based on price support resistance. And guess what? Yes, Elliott waves is part of price support and resistance. I'm going to show you something on the technical chart today to show you a little bit of how this hybrid works. And I pay attention to, and I work with 8 layers of price support resistance. I use specific trigger times throughout the trading session. So I have certain timings when I time my position. So my setup has to be in sync with the timing, with the momentum of the market, with the technical. So there are a lot more criteria. So I have a checklist for that. And also at specific price zones. Remember, when you're buying real estate or, when you're getting into real estate, locations, that's what they're telling you. So it's all about the location, where you buy, where you sell, where you decide to enter your trades, and obviously the target levels, and also chart synchronicity, which is huge. Chart synchronicity allows you to see what's moving, what's leading, and what's lagging. So in a strong market environment, you want to make sure that you're in, for example, trades that have relative strength. You don't want to be in trades that are weaker than the market because they're going to have a really slow progression higher. And the other way around, in for example, a weak market environment, you have to look for weak stocks, for example, if you're trading stocks, because this way your stocks are going to accelerate lower faster than the market itself because of the relative weakness. So I teach traders how to generate income in two hours or less, and also create your own personal wealth ecosystem. So I teach traders that whatever they get out of day trading after they pay their bills and all that stuff, to put it into swing trading and investing and actually build their wealth this way. If you guys want to find out more, you can go to our website, traderllo.com, also on social media. You could see that I literally have been in the media and have been doing presentations for a very long time. Also last year we won, and we're nominated this year again. So it's going to be very interesting if we do it again this year. We have been nominated again this year for the Benzinga FinTech Awards. TradeAlert has been nominated the Benzinga overall winner in the best financial literacy tool for 2021 category out of 400 companies. So this literally is something that we're really proud of. This is my award right here. And trading battles, right? So when there's a trading contest somewhere, I dive right in. I love trading contests. I love, getting into the game. And, I actually won 2 trading battles, one in 2021 and one in 2022. It's actually the organizer name is the organizer contest name is actually the trading battle. That's why you're seeing here the TTB. It's organized by a broker in Australia. And you can see me right here. I was trading and it was fantastic. I just love it. Real time. And it's all for all 3 categories. So it's for day trading, it's for swing trading, and for a trade result. All right. So you guys know the drill. Everything that we provide is for educational purpose only. So trade your way to financial independence in 2021, right? So this is actually the goal, right? When you're looking at why are we here? Why is everybody here? Why are 200 people in the room right now listening to me, listening to what we have to say, and listening to all these fabulous fabulous traders that we have invited today? Is because we want to take care of our financial freedom. We want financial independence, right? We all saw what happened in 2020. We as traders were actually some of the privileged ones because we were in the market. The market operated completely electronically. So even if there's a pandemic or there's anything that is being thrown into the market, even in a recession or a depression, guess what? The stock market and the market in general is still going to be working. So think about this, and whatever your goal is, just think about, what do you want for yourself in 2022? Do you want to master Fibonacci's? Do you want to master trading? Do you want to master how you can get from point A to point B in your trading and fast track your trading so you could start earning an income? You could start actually building your wealth and building, for example, your nest egg. So how to get started working on your goal, right? How do you get started working on your goal? Do you have, an action plan or a blueprint? I mean, these are very important topics that you need to address. And remember that goal setting is very, very good, because if you delay, for example, if I want to learn how to crochet, I don't know, I want to learn how to crochet. I want to put myself a deadline, because if I say, okay, I got to learn how to do that stuff, then it could take me like a month or 5 months or 5 years down the line, because I keep on, I don't have a set goal. But if I say I want to learn it in 3 weeks, then I'm going to create an action plan for myself, allocate time so I can learn a little bit at a time. So that's how it's done. So remember, do that. Yeah, I'm not going to get into that. That's a topic for another presentation. But anyway, so setting goal facts. If you give yourself 30 days to read a book, it'll take you about 30 days. If I give myself or yourself 3 days, it'll take you 3 days. So remember, set a goal. Same applies to your trading goals. You can reach them faster by creating urgency in your in what you're doing. So before you dive into trading, ask yourself this. Do I like trading? Am I in trading for the right reasons? How much time can I allocate to trading? Do I see this as a business hobby or a business opportunity for myself? Because let me tell you something, trading is not a hobby. Trading should be like a business, and you have to run it as a business. you know, the way you run your business, have a blueprint, have a goal, have, for example, you know, expectations. You're going to have expenses with that business. So treat it as a business and treat each and every single day as a day where you show up for work. So for example, you know, when I wake up, I get everything ready. And when I'm at the computer and when I'm trading, you know, there could be like a thunderstorm outside, or there could be people knocking on my door. I don't care, because this is I'm at work. This is my allocated time for trading. I don't even work a lot because, like I said, I only basically trade 2 hours in the morning. So what is my P&L saying about my trading? So take a deep dive into your P&L. This week is going to be a perfect opportunity for you to do that. It's a little bit slower in the market, phenomenal moves in the market, great money-making opportunities today we had, and also yesterday. Great trades. In fact, we're going to recap a little bit of some trades that I have mentioned and some names that I've mentioned yesterday when I was doing the presentation about Fibonacci's, and we're going to revisit them today. But think about this. Take a look at take a deep look into your P&L and say, what was this P&L telling about me? It tells me that I either need to get more education, I need to be more patient, I need to do this, I need to invest in my education, I need whatever it is. So take a deep dive and take a look and see what that is telling you about you. The other thing is, like, ask yourself, am I respecting my trading plan? If you don't have a trading plan, and remember, don't be afraid of the term trading plan. You need to have a trading plan. When I first started trading, I thought, you know what? I don't need a trading plan. I have it all in my head because it's not that sophisticated. It's not that complicated. I was only looking to trade 2 patterns at the time, 20 years ago. And, you know, it's not sophisticated. The reality is that I was literally on track into my first 3 to 4 months. And then guess what? I fell off the wagon because I was chasing the next best, the next best service, the next best indicator. And guess what? I delayed my trading progress with about 5 to 6 months while I was playing around with new opportunities. So that I literally stepped away from my trading plan. All right. So why most people do not succeed in trading and investing? Well, because they don't believe they can actually do it, right? They don't have confidence in themselves, right? They're not committed. Third of all, achieving financial freedom and believing wealth is just a dream. Procrastination, so I'm going to do it tomorrow. Oh, this doesn't work. You know, this is not good, or whatever it is, they're going to try to procrastinate about something. Not having a game plan and a goal. This is really big, and always delaying. So back to business, volatility is very high and will remain high through 2022. We all know that. We have midterm elections that are happening in November. We have the energy crisis. Everything is going to be a chop fest right now. We have the Russia-Ukraine war. We have FOMC raising rates in about 2 weeks. Again, we have inflation, which is through the roof. And we have a lot of things that are happening in the Middle East. We have, you know, everything every time you turn on the TV, there's always something. There's a hot spot in Syria. There's a hot spot in Iraq. There's a hot spot in Israel. There's a hot spot everywhere. All right, so let me show you what we did. And this is 2 years, 2 hours per day, sorry, 2 hours per day or less in trading. This is actually the performance trading with one contract, no position sizing, nothing else, just one contract. So just one contract. If you would have traded with me, educated by me, if you took one contract and you really didn't have to take the trades because I was delivering the trades for you. So not only that, I teach you how to fish, and you're always going to get bombarded, and I'm always going to drill information in your head every single day, even if it's repetitive, but you need to have that done every single day. So you get the stereotype and you get into that practice of what you need to do on a daily basis when, for example, you want to trade on your own. But these are the results, for example, from 2021. Yesterday, I showed you the results for 2022. And of course, if you want to look at our performances on our website, since we created the trading room, and this is accountability. And this is exactly what we do in the trading room. All the trades are time-stamped. Everything is just everything. Yeah, it's with one contract. Okay. All righty. So yes, to answer your question, Matt, yes, 10 years of investment banking. And then after that, 20 years of trading, professional trading. So I've been a trader for 20 years. Prior to that, 10 years of investment banking. All right, so I'm going to show you the performance later. So anyways, I trade futures 2 hours or less. Forget the material stuff. It is about time flexibility. It's about time flexibility. Of course, anytime. And don't think that I'm ignoring your question. Okay. August was phenomenal. August was phenomenal. Just go to our performance, go to my website, tradeoutloud.com, go to the trading room tab, and then scroll to the very bottom. There's a big fat green button that is going to show you exactly the performance from 2017 till now. And you can see there are year 17 was not a volatile year. 17 was a really flat year. 18, we started a little bit of volatility towards the end of the year. And then 2020, and as volatility grows, the profit grows, right? As volatility grows, volatility is really good for if you know what you're doing. All right. So everything you want, guys, is on the other side of fear. So whether you're applying whatever your trading style is, whether you decide to go the LA wave style, whether you want to go the hybrid style like I am, whether you want to go towards the, I don't know, Fibonacci style, or a combination of everything, because I'm using a combination. Like I said, I use 8 layers of price support resistance to give me those high odds trades. And you can see it in my performance. Whatever you want to do, it's on the other side of fear. Don't let fear and doubt, stop you from achieving your dreams. The most important parts of trading are literally rarely discussed. Like confidence, conviction, patience, mental toughness, discipline, education. You can see the exclamation mark in education. Guys, there are, a lot of trading education companies that are phenomenal out there. I'm not just promoting for myself. I'm just, making you guys aware. Do your due diligence, by the way. Do your due diligence. Make sure that they're legit, and make sure that you get your trading education before you blow up any kind of account. Trading education is very, very, very important. It's going to take you a fairly long time to go through trial and error. When I first started trading, I had a full-time job. Last time I was working at an investment company here in Detroit, Michigan. And I'm in Detroit, Michigan, by the way, right now in the summertime, and in the wintertime, I'm going south, just like snowbirding. I'm going to my house in Boca Raton. And education is very important, guys, because if you don't have education, nothing else is going to matter. You're going to blow up your account. You won't know how to trade. It's not only that, but you don't know how to manage your money. So when I decided to quit my job, I've already had about 2 years of trading education and have not even opened a retail day trading account. I had my swing account. I had my investing account, right? Because I was literally taking care of that myself. But I did not open a day trading account because I understood that price action is so fast. When you're day trading, you have to really know what you're doing. So I got my trading education first. Then I quit my job and I said, I'm ready. After I took probably like 3 to 4 courses, and I'm not kidding, and they're not cheap at the time. All the courses that I took were like $10,000, $8,000, $9,000. So they were very expensive. So I had to realize that I have to invest in myself to fast track and to get there faster. You know why? What is the one thing that we really don't have on earth? We could have money, we could have anything. What is the one thing that we don't have? Time. So I understood that if I can literally buy a shortcut, and that's what I did. I can literally buy a shortcut. So I invested as much as I could in myself, and I bought all the courses, all the mentoring, all the education that I could to fast track and to get me on track fast. And this is what worked for me. All right. So, having levels, and we're actually going to dive a little bit to the trading today. I'm going to show you some trades right now. And I'm going to show you exactly what I mean by, my hybrid. And it's going to blow your mind, and it's going to be super fantastic. Let me just get to my cursor. Okay. All right. Oops. Am I sharing the screen? I think I'm sharing the screen, right? You guys see the screen right now? Yeah, I'm only trading 2 hours, Matt. I'm only trading 2 hours. In fact, today I was done at 10:30 in an hour. Yes, I'm only doing that. So, all right. So today we actually had 2 trades. We traded NASDAQ and YM, but I can't find my cursor because I want to show you something really cool. Okay, here it is. All right. So this is what, okay. This is the Dow. This is the 5-minute chart, okay, of the Dow. You can apply the strategy on any time frame. So it works on day trading. It works on swing trading. It works in investing. So it's all about the pattern. So it really doesn't matter what time frame it is. All right. So yesterday I've noticed that the price action is actually holding. And I've also noticed the fact that those of you guys that were here and were paying attention to what I was teaching yesterday, and it was that what I was presenting, is that I mentioned some stocks, right? If you guys remember those stocks, I mentioned Tesla, right? I mentioned Starbucks. Do you guys remember? I mentioned Amazon. I mentioned Microsoft that may be ready to progress higher. And I mentioned spiders as being, and in general, the market, the Qs, the spies, and the diamonds as being a decision point for them yesterday, right? And it was, right? It was a decision point. First, let me show you what I'm looking at. So first off, I'm looking at lows. The lows, the most recent lows that I'm seeing on the chart. Okay, yes, and we're going to take a look at those. We actually traded those, right? And we actually made a boatload of money today. So first of all, we are looking at some lows, right? In the context of the chart. And then after we figure out what the lows are, we want to make sure that the first move that we have to the upside, right? Whether it's a breakout, yes, it is tradable. Whether it's in a downtrend or an uptrend, I really don't care because I trade both ways. And this was an opportunity here for a breakout, for a little bit of squeeze to the upside. But anyways, what I was looking at is actually for a breakout, for a continuation higher. You guys see this dotted line that I have here. This was the line in the sand. And in the trading room, I mentioned that if we break above this dotted line, we will continue higher. At the time when we triggered above this dotted line, the risk was actually really wide. So I did not want to take the trade because the motion was already, and it was literally the trade was already in motion, and there were these really wide bars. When the market is fast, I literally slow down. So I push my chair back and I just wait until there's another trading opportunity. I never get into the market when you're having a really fast-paced market, because all these really high and really wide range bars are going to give you really wide stops, and the risk increases exponentially with every move to whether the upside or the downside. So I wait for the pullback. I wait for the pullback, right? So you guys see where this pullback is happening. I wait for the pullback, and then I predict where these pullbacks are happening based on my hybrid. And my hybrid tells me that there is a prior resistance zone here. You guys can see it with the blue, right? I'm going to draw it across, right? And what this tells me is that every single time the price, if it shifts into an uptrend, so this is my line in the sand, whatever trades above the dotted line, the line in the sand, it means that it's going to what? It's going to be pushing higher, right? It's going to be bullish above, right? So in this case, I knew that the price already tested. These are algos or traders that tested the market to the upside. So I have the confirmation that the big boys are on board to the bullish side. So what I did is I looked for a pullback into the prior resistance area. So in this area right here, you see the zigzag, right? This is the prior resistance area. This is the prior resistance that now becomes minor support. All right. This is the minor support. This is the retest. This is the hybrid that I'm talking about. Okay. So when we pull back here, the next thing that you have to look for is a pattern. So patterns, we're going to put a P for patterns, are very important because I don't buy on support. This is high time amateur hour. And I was taught by my mentor. And by the way, I was mentored by one of the most phenomenal traders on Wall Street. He was a trader at Goldman Sachs, and he took me under his wing, and it was not cheap. And I'm telling you, it was actually probably equivalent to a Harvard degree. And I'm not kidding you. That's how much I paid. But it's priceless because you're not losing money. It provided me the accuracy of being right at 80% of the time into every single move. Traders will kill to be coached by this individual, and he's still right now. All right, so everything that I know, so I knew a lot of technical analysis, and like I said, I took a bunch of courses. They were all phenomenal, okay? But I was missing something. I was missing where the big money is. So this is what this guy did. It showed me the patterns that I need to stock for in order to make the big bucks, right? Because I was making like little money. I was consistently profitable. And I wasn't making a lot of money, right? But now I know with this methodology that I'm making money 80% of the time. So the pullback, in this case, this was the breakout. You see this yellow line is also median breakout point as well. And look at the nice move to the upside, right? So I'm going to clear this chart because I want to show you something else. So first of all, we're going to recap. This area right here represents what? That minor support zone, right? And you can see the reaction time. Now there's another thing happening, right? The price went up. You guys see my cursor? The price went up. You see my cursor? Price went up. If I connect, this is going to be priceless. This, whoa, this is way too thin. Hold on. Okay. All right, here we go. If I connect this high, take a look at this, right? I connect this high. Remember, I'm in this trade. So this is where I made my money and I'm done, right? This is where I made my money and I'm done. But if you still want to trade the afternoon, right? And remember, setups, and especially in day trading, don't happen as often. Traders think they do, and I thought I did. I was one of the traders. I'm waving my hand up in the air. Show me, guys, right here, how many of you guys got into a trade or took, probably if you're stock trading or futures trading, take more than 8 to 10 trades in a day. I was doing that 15 years ago. I'm raising my hand right now. How many of you guys, raise your hands? Raise your hands. How many of you guys take more than 7, 8 trades a day? A lot of you. Okay. So the reality is that I was taught that, hey, if there's a setup, you can take it. Wrong. You cannot, not all the setups are reliable. That's why a lot of traders fail, because there are patterns that work at distinct times within the day at certain timings, right? And there are, yes, and you're not going to find it, Matt, anywhere. We teach it in our course. It's something that my mentor taught me. So the reality is that when you look at patterns, they happen at precise times and locations, right? At precise time and locations. So when we had this trade over here, right, we have the resistance and we have the support. Let me just, okay. We have the resistance here. This is the minor support. So this is the leg. This is, let's say, the A to B, right? A to B. And then we have the pullback into the C, and then we have the D. We have the biggest move here. Okay. Now, when the pullback occurs, the pullback, you can see how shallow this pullback is, but it tested into this area. You see what the timing is here? Now, 11:15, at 11:15, you hear what I said? The door closed. Boom. The door closes at 11:15. Trades that set in motion at 10 o'clock close at 11 to 11:15. That's how much time you have to stay into a trade. Okay, that's how much time you have to stay into the trade. So it doesn't matter the time frame that you're trading. This example is on the 5 minute for day traders, right? But you can actually you could actually apply this to any time. And I don't know if we have enough time. Do you guys want more charting or more slides? We could totally do more charts today if you guys want. Charting. Okay, you got it. Okay, yeah, let's do more charts. Okay, because I know, yeah. Okay, let's do more charts and we could do like a whole, analysis thing. All right, and I agree because I like to talk more about, but then I have to show you something on a slide, the morning hybrid Elliott wave plus timing that is really important about this. And you guys should take a note, take a picture and apply it into the market. All right, so remember this area, right? Resistance. Let's call it support so I don't confuse you. Then we have the pullback. You see this prior high resistance, now support, right? You see this high right here. This is resistance. This is support. Okay. You guys see it? See how interesting it is? When do you think this ladder happens? When do you think this ladder happens? When do you think this ladder happens? Only in uptrends. Only in uptrends. So you're having this ladder, this Elliott wave hybrid is showing you uptrend. So what this is showing, as soon as you have a higher low, your bias should change. You should go like, I'm going long. It doesn't mean that you're ultra bullish. It shows you just where the move is at. And once this happens, you're never going to short this little, these little pullbacks. Okay. So it's going to keep you on the safe side. Okay. It's going to keep you on the safe side. That's what's so cool about it. Now I want to show you something else and then we're going to go to charts. I promise. All right. All right. You guys see this slide, right? You guys see the slide. So at 9:30, the market opens, right? This is timing. I don't just share this slide with anybody. I'm just sharing it here with you guys. At 9:30, the market opens. What happens? There's usually, the market has an impulse, whether straight up like it did today, or it's literally chop testing, right? It's a little chop test. It goes back and forth, back and forth, back and forth, back and forth, right? Until it digests the overnight move or the release that probably came out at 8:30 or something like that, because the market needs a little bit more time. So for example, if the market opens at 9:30, and if you're a day trader, you want to speculate on this momentum, right? You want to speculate on the timing from 9:30 to 10:30. So I'm not saying that you're going to get in at 9:30, but you can have a setup as when you're having a really strong trend. Exactly, Steve. So you have to wait until there's a pattern. We have a strategy that we can apply in strong dominant trends that you can apply at 9:32. We have a strategy that you can apply at 9:35. We have a strategy that you can apply at 9:45. 9:45. These are the most dynamic chimes. You only should trade them if you know what you're doing, but we have strategies that are ultra simple, like ultra simple. Okay. So they're super easy to trade with the highest volatility because we want to be done, baby. Like I'm not here. I'm not going to be glued to my computer like all day long. I'm not. I mean, I put too much effort. I've invested too much money in my learning to make money in a fraction of a time, right? To make money fast. That was my goal, to make money fast. Because what is the one thing that we don't have? We don't have time, right? We don't have time. We want to make money fast and enjoy ourselves. All right, so we have strategies here. Typically, if the market goes up into 10 o'clock, at 10 o'clock, it's going to reverse. Okay, it's called 10 o'clock reversal time. And at 10 o'clock, it's going to reverse and it's going to pull back. The pullback is going to be shallow. If you're going to have an uptrend, or if the market is ready to progress higher, this can be applicable to stocks. It is applicable to futures. It is applicable to ETFs. It's applicable for Forex, for anything that you're trading, for any time frame. Okay. So for example, if the pullback is shallow, when I'm calling a shallow pullback, just eyeball it. You don't have to measure it. Don't even put Fibonacci's or anything. Just make sure that the low is higher than the prior low, and you're not violating the 930 low. And if you're getting a rotation into the 1030 at 1030, and if there is a trade that is setting up, well, anywhere between 1015 and 1030, that trade is going to continue higher into 1115 to 1130. This is when the door, remember, closes. 1115. That's why I don't look for trades at 1115. I don't short pullbacks, because the bigger moves are, and the institutional money is into the higher low continuation higher, and not into the pullbacks. Okay, not into the pullbacks. And then you can expect a pullback, and then the market can go higher. So there you have your A, B, C, D, right? And eventually a continuation higher or a decision point at that level. Now, what happens if you have a choppy market? And then I'm going to put a reminder here, 9:45, right? And this is AM, this is Eastern, right? 9:45, that we're going to go back and talk a little bit about it. And what happens if you have a choppy market? It's choppy, choppy, choppy. It doesn't go up, it doesn't go down. Guys, if you're having a choppy market, for example, from 9:30 to 9:45, evaluate it. Evaluate the highs and the lows within that contest, whether you're trading stocks or whatever you were doing, okay? Futures, it doesn't matter. If you're not having a new punch lower into the 9:45, then it seems that the market, and it looks like the market will be holding, and a breakout is imminent, even in a downtrend. Okay, even in a downtrend. So if it breaks above this high over here, the highest high that you guys have between, let's say, 9:30 and 9:45, the price action may continue higher, and you may get your first trade in all the way into 10 o'clock. Remember, as you're approaching the 10 o'clock, and if you're in a trade, and by the way, this applies to downtrends as well. This applies to downtrends, carbon copy, you just reverse it. So if the price goes higher and goes ballistic into 10 o'clock, remember that typically at 10 o'clock, there's a reversal that is going to happen around 10 o'clock. So if you missed these trades right here, don't take the first pullback and buy that happens off the 10 o'clock. Just wait until 10:20 or 10:30, because this is typically when the next pullback settles. And then take it from 10:30 upwards, and you have that really nice window that is open. This is actually when the door opens, right? The door opens at around 10:30, and boom, it closes around 11:15, very close to 11:30 when the London session closes, okay? This applies to futures. When you are trading stocks, why do you think it's the 10:15 to 11:15 to 11:30? Do you guys know what happens? It's the midday doldrum. That is when they start. Traders start taking their lunch breaks, even traders that are supervising algorithms. Volume is going down a little bit, right? Traders are taking their lunch breaks. They're either easing out of their positions, they're either done like me and enjoying the rest of the day, or they're simply going to lunch or doing something else. Okay, that's what happens. And the volume goes down between 11:15, and actually 2 o'clock or 2:30. Volume picks back up again around this time. All right, but it all depends on where the structure and where the next resistance in the market is, and so on and so forth. Now, let's go back to 9:45, right? I'm going to clear this out so you can have a clean slate. Around here at 9:45, now remember, there are some news releases that typically come out at 9:45. You're not going to find this timing anywhere on the internet, okay? Anywhere. So what I'm telling you right here is prime information. Typically, if the market goes up from 9:30 till 9:45, at 9:45, you're going to witness the first little reversal. It's going to be a really tiny reversal. So if you miss your trade at 9:30, 9:32, 9:32 or 9:35, there's a really small chance and a really small opportunity for you to have a little consolidation there for about 5 to 10 minutes. If you're looking at a 1 minute or a 2 minute chart, that can push you to 10 o'clock reversal time. Okay, so at 10 o'clock, when you're in a trade, can it go higher into 10:15 or even into 10:30? Absolutely, it can go a little bit higher. It depends on the market momentum. The only thing that you need to pay attention too, especially when you're doing this, is to trail tighter. Okay, make sure that you raise your stop, raise your stop, raise your stop, and have a you know, kind of like a price action dynamic in trailing your trade. Now let's take a look here. And by the way, I don't have any favors, so if you have you know, any other you know, stock that, and we're going to look at stocks in a second. So what is this move here? We went higher, and listen, I'm not making this thing up. Okay, and then we go back down, right? And then we go back down. Now I would like to show you something. Okay, here it is. Hold on. All right, I'm putting my cursor over this candle right here, the topping candle, right? Can you look at the price bubble below? Type it in the room. What time is printed on the time bubble? What time is print? 9:45. 9:45. So you got the first move. This is the lowest point from the New York trading session. Everything that is in gray highlighted area, by the way, guys, everything is overnight, and this is New York session. This is what I trade. I trade the New York session. I don't get up at 7 o'clock. I don't get up at 5 o'clock in the morning. I just trade this section right here into 11:30. This is what I trade. That's it. Can you trade the rest of the day? The more you trade, the more money you make if you know how to trade the rest of the day. Like I said, you have to have your timing, you have to have your pattern, and you could actually trade all day long if you want, nonstop. So this is 9:30, right? I want to put my cursor over here, over these lows. Can you guys tell me what is the lowest low right here? 10 o'clock. 10 o'clock is what? 10 o'clock is reversal time. Do you see this candle? It pulled back. Do you see this candle right here? Never made a new low. So this is the lowest from 10 o'clock. What is, and this is guys today, but it happens almost every single day. Almost every single day. It happens 95% of the time. All right. So what is the move, guys? What is the move? Where is the price going from this 10 a.m. low? Higher, right? It is going higher. Guys, 95% of the time. I mean, if this is not high odds, I don't know what is. I don't know what is. And it's simple. You just have to look at the pattern and look at the time. Look at the pattern. Look at the time. I mean, it's not rocket science, seriously. All right, because if trading was hard, I don't think I would have done it. Okay. Okay. Yes, absolutely. It happens all the time. It happens all the time. It's so super simple. It's not hard. And then we're approaching what? Then we're approaching what? Can somebody tell me what this topping is here? Can somebody tell me what the time is? 11:15. 11 o'clock, 11:15, right? 11:30. Here's 11:30 when the London session closed. Okay. You see how sloppy the price action is from 11 o'clock until it starts moving higher, you know, 1 o'clock, 1:30, zigzagging, 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 exactly, zigzagging, zigzagging, right? Okay. All right. So in other words, let's talk about, I'm looking at the time here because I don't want to run out of time. All right. Let's go to, okay. Let's go to the SPYs, right? Let's go to the SPYs. All right. So remember we were talking about the SPYs yesterday, right? And we were talking about what I was saying, that the 61.8% is really an attractive spot to buy for institutions, right? Institutions love to start scaling in from 61.8. And I said that if we trade, look for the recording yesterday. I said, if the price is going to get above, if the price is today is going to get above the high, and it seemed kind of like, oh my God, it's so bearish. It's a, you know, it's a red candle. It's right. And if I said today, if we're going to take out the high of, was that day yesterday, right? So if today we take the high of yesterday's candle, right, whatever that is, and I said 394.15, 394.20, I said we're going to go higher. Where are we going to go? Into this 50% retracement. This is a bullish candle. We have about an hour and 15 minutes left. We're going to meet again tomorrow. Okay, this is how accurate what I'm teaching and what I'm trading is. And that's why it makes it, that's why I love it. It's instant gratification. Now, who doesn't like instant gratification, right? So you see this is the bull candle. This is a win bar. It's called a win bar. So this is a candle that is dominated by bulls. So buyers are fully in charge of this domain from low to high, right? If we close into the 50%, guess what's going to happen? Tomorrow, we're going to go 400. You see this 400 right here? This is where we're going next. We have a confluence level into the 400 to 450. This is where we're going. That's how confident I am. Now, I'm not even putting a lot of thought because I see it on the chart. Trading should be stress-free. It should be like this. You identify the pattern, you go with it. Okay. All right. So I mentioned this. Any importance of 3 p.m. to 4 p.m. trading profile? Aha! I actually teach this in class, but yes. For example, from 3 to 4, it's actually from 3:30. It's actually from around 3 o'clock. Let's call it 3 o'clock. I'm not going to go into a lot of details because it's a segmentation from 3 to 3:15 to 3:30, 3:45. But anyway, so I'm just going to break it down. So when we are approaching the end of the day, right? When we're approaching, you got it, Matt. Now it's actually running from 15 to 15 minutes, but it's basically 3 o'clock, 3:30, and 4. These are the basic within those timings. And then you get some pullbacks that you're expecting into those 15s. But anyways, so from 3 o'clock to 4 o'clock, volume is going back into the market. Volume is going back to the market. What do you think? If we have an uptrend, this is what happens. This is the psychology behind the action. If we're having a bullish market, right? Everybody wants to push into the market because the direction is clear. For example, if we have an uptrend, everybody goes like, oh yeah, and if I see a pullback in an ongoing market, if we're getting a pullback into another leg, into a hybrid of Elliott hybrid into a minor support, then guess what? I'm going to move higher. So I'm going to get into the next trade. So guess what? It is time to go long again. If you have a very strong trend, go back into the market. Go back into the market because more likely the move is going to continue into the end of the day. And that's why you're seeing the volume increase. Now, there's another thing that is happening. We don't have this situation right now. And in fact, we haven't had this situation. But typically when you have like a hard sell, so for example, you had like a massive sell. For example, I don't know how yesterday, how the close was yesterday, but let's take a quick look and see if I can, no, it was sideways. It was sideways. Yeah, they were expecting, yeah, the numbers today. And yeah, so let's go back to the daily here. So for example, if you have, let's say a day where you had big selling action and we're all red. Let's say the Dow is down 500 points. The spider, let's say the mini S&P is down 30 points. Anyways, a big red day where you didn't really see. So even a downtrend development. So you're having something like this. All right. So you're having, let me just trace it here. All right. I'm going to do this. Okay. So you have a day that pretty much looks like this. And towards the end of the day, you're going like this, right? It's like a crash. So when you see this at around 3:30 p.m., okay, 3:30 p.m., you need to look for a pattern. Okay, you need to look for a pattern. The pattern would be something like this. So these are bars. Okay, these are bars. They're going down, 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 right? You're either going to look for a doji. You guys know what a doji is. Okay, you either look for a doji or you look for a little, let's say, bottoming tail candle like this, and you're going to have a body like this. Okay, this is okay, kind of like this. So you're looking for reversal clues, right? You're looking for reversal clues. As soon as you have those reversal clues, you're looking for the tops of those reversal clues, and then you're going to go long. This is going to be above these highs, you're going to go long. And this is what's called the, ramp. Okay, the ramp. What is the and I wasn't even planning on talking about this, but typically the ramp is created by the fact that all of these traders that were short, right, they want to cover their shorts, right? So they don't want to stay in the short, they don't want to carry the short position overnight. Okay, they don't want to carry the short position. Oh my gosh, I only have 10 minutes left, 9 minutes. Oh my God, David is going to kill me here, going to kick me out. Okay. Yesterday we talked about Tesla. I really would appreciate if you guys just review my recording from yesterday, because I talked about Tesla, and I told you guys that Tesla is holding really well. There are a few names that are holding. Tesla holding really well. I don't run a day trading room, but Tesla, it was so good. I took it long today. I took it long as a swing trade, and I took it long as a day trade. So anyway, so I said that if Tesla is going to start trading above 276 or 276.20, 276.20 is where I got it this morning. It's going to run into the 280 and probably 282, 284 and higher. It is a win bar. I have it also as a swing, and I'm keeping it for overnight. Yes, I'm keeping Tesla for overnight. I love it. I made massive profits in Tesla today, along with day trading Tesla, having a position and swing in Tesla, and all the day trades. I did 2 day trades today as well. So this is one of example, and you can see here that it's a lot of chop and it's crap. So literally you're finding the needle in the haystack. So this is what technical analysis does for you, and not technical analysis alone, but it's definitely a candlestick reading as well. There's another stock that I mentioned yesterday. Do you guys remember what stock it was? Starbucks. What did I say, guys? Starbucks and Tesla have the same pattern. They're into the rising 50 SMA, right? They're into the rising 50 SMA. Do I have a bottoming sign? Do I have a bottoming sign? Take a look at this bottoming tail, right? This is a bottoming tail candle. It's called a bottoming tail candle. Why? Because it's showing a bottoming, right? So it's a bottoming candle, rotation into resistance. It's most likely going to go into the 89, right? Trading made easy. Trading made easy. I also mentioned something else. I mentioned Amazon. Right? Wouldn't it be awesome to learn how to trade like this, like literally stress-free and have a lot of fun? Okay. Talking about minor support, right? Talking about minor support. Bam, again, take a look. Oh, this is too good. So good. This is so good, right? Resistance, low, higher low, higher low, higher low, pull back into prior resistance, now minor support, bam, rotation, candlestick here, boom, higher. It's not hard. It's not hard. And I mentioned that if Amazon is going to trade above this high, is going to try moving higher. And I also mentioned that Amazon, the price yesterday was actually around here when we were talking, around here. And I said, look at these higher lows that it's trying to do. It's going to try to blast a little bit higher. Okay. And all right. So these are just very few examples. Very, very few examples. All right. All right. I also mentioned Costco yesterday. So yeah, so they're good. I mean, guys, if you're trading with us, you would have made money. Lots of money. Lots of money. I love money. You have to have a really good relationship with money. All right, here's another one. Netflix. Netflix already did the rotation. And I had another one here that I wanted to show you that it's going to do a short squeeze, and it's just setting up right now. Let's see if I have it here. AVGO is also doing, NVIDIA, because I had a lot of questions for NVIDIA just getting ready. All right, NVIDIA is at the breakout point right now. It's not after the fact. If you guys are here for the first time, if you didn't hear my recording, that's why I love these events, because you could go back and you can re-listen to the event and you can see like, oh, wow, yeah, okay, it worked. For somebody that is just attending, it's like, oh, okay, it was maybe after the fact. No, it's not. Okay. So if NVIDIA is going to break 137.85, 137.85, it hasn't gotten there yet, or 80 to 85, 137.80 to 85. I'm going to buy it. And I'm going to look for a target into 144 and close to 150. 144 and 150. Okay. All right. So let's wrap things up here. This was a totally unplanned presentation because I talked about something that I totally wanted to talk about something else. But anyways, so can you guys see this? Okay, hold on a second. All right, I just put a buy in the video. Okay, because I didn't want to miss it. Okay, so guys, in trading, you should only have 4 outcomes, or I have 3 minutes left. In trading, you should only have 4 outcomes: big wins, small wins, break-even trades, and very small losses. We trade live every single day, literally stress-free. We have a system that not follows, is in sync with the institutional money flow in the first 2 hours when we're day trading, and you can see how our swing trades are working as well. And we are focused on specific times, specific locations, and specific technical patterns. Do you know who else is focused on that? Algorithms, right? That's why, we have a very highly successful method, because we eliminate emotions. We don't have emotions. Why? Because we use specific risk levels for all our trades, and we allocate a specific number of trades per day, depending on our account size. All right. So if you guys loved what we have talked about today, I teach an institutional grade trading system. We actually have classes for futures and for swing trading and investing. You could go to our website and actually find those out. And we trade institutional levels, stress-free levels, precise buys and sell zones. You guys heard me to the penny, calling trades, management, risk management, because this is how a real trader. Okay. Highest trades, etc. We put the puzzle together for you. If you want to literally have a really phenomenal year, end of the year, trade with us. If you're losing money in the market, if you don't have a system, if you're going, oh my God, what am I doing? It means that you need trading education. So the question is, what kind of trader are you? Are you a welfare trader, not a successful trader, an eternal student, never committing? Or do you have a millionaire mindset, right? You need to be in the millionaire mindset trader, a successful trader. Guys, invest in yourself to achieve the best results. We actually have a course that is $5,999. That comes up to $16.43 a day. What? I paid that for like half an hour of mentoring session. All right, so we are going to offer you a lot of goodies. You could pause on these pages when you are going to see the recordings right here. And we are opened for October for the Powering Confucius Day Trade course, October 17th to the 21st. If you guys are interested, go to tradehello.com/futures or visit our website for more products and services. Thanks so much, David. I'm on time.